Robinhood to easy trading restrictions. GameStop stock soars 100%. New York CNN Business. GameStop traders sent the stock on the wild ride Thursday, and it looks set for another manic session Friday. The stock lost more than 44% of its value on Thursday after surging nearly 40% at one point earlier in the day. Adding to the drama, the trading platform Robinhood restricted trading in the red hot stock as well as several others. We continuously monitor the market and make the changes where necessary. In light of recent volatility, we are restricting transactions for the certain securities to position closing only. Robinhood said in the statement, adding that it was also doing so for AMC, BlackBerry, Bed Bath and Beyond, Nokia, and three other stocks. Amid significant market volatility, it's important as ever that we help the customers stay informed, Robinhood added. The backlash was swift, and hours left after implementing the restrictions, Robinhood said it would resume limited pushes on those securities starting Friday. GameStop shares surged in pre-market trading Friday, gaining 100% as of 4 a.m. ET. This was a risk management decision and was not made on the direction of the market makers we wrote to, Robinhood said in the blog post. We are beginning to open up trading for some of these securities in a responsible manner. Shares of GameStop, called GME, fell to more than 60% at one point and were hurted several times Thursday after having soared in recent weeks because of support from individual investors on Reddit. The stock was flat about 10 minutes after the market opened. Two exchange-traded funds with significant positions in GameStop plunged Thursday too. The Wedbush ETFMG Video Game Tech ETF and SPRD S&P Retail ETF both fell about 10%, but each of them are still up more than 25% so far this year. Despite the losses Thursday, the GameStop shares are still up nearly 950% in 2021, surging from just under $20 at the end of the 2020 to the current price of about $195. Each largely because of an army of investors who are buying the stock to hurt hedge funds that have set against GameStop. The phenomenon is called a short squeeze. An investor who thinks a stock will fall below the shares and sells them, well, with the hope of buying them back at a lower price and pocketing the differences before paying back the loan. The problem is that the short seller can be hurt if the stock they borrow keep climbing. The losses in theory are infinite, so that created another buying frenzy as short sellers rush to the stock stock before it moves even higher. A community on Reddit called the Wall Street Bets has been leading the charge against the short sellers, Experts said that the rise of no-fee trading due to the popularity of online brokers such as Robinhood just make it even easier for individual investors to keep flowing into GameStop stock. The GameStop phenomenon has taken Wall Street and all of America for that matter by storm. The White House has said it is looking into the stock's massive surge. Federal Reserve Chair Jerome Powell was asked about it during a press conference Wednesday. It's unclear how much longer this short squeeze can last. An online brokerage, TZ Ameritrade, which is now owned by Charles Schwab, has started to limit trading in GameStop and other shares that have also gotten a pop from the Reddit crowd, such as movie theater chain AMC and Wells Fargo's financial advisory unit has banned employees from making recommendations to clients about GameStop and AMC. The big concern is that average investors may be ignoring long-term risks about GameStop as they look for a quick short-stop pop. Although the retailer reported a decent holiday result and now has backing of Chewy co-founder Ryan Cohen, GameStop is still losing money as the sales of video games have increasingly shifted from buying a cartridge in the box at a physical store to the download model. GameStop shares are trading completely untethered from fundamentals, and that is dangerous. David Traynor, CEO of New Construct and investment research firm, said in an email to CNN Business.